So anyways, tonight we got the honor of having Wendy Kirkland here with us. Wendy started years ago and launched a women's option traders program and was so successful. She also in 2009 co-authored Option Trading in Your Spare Time, a guide to financial independence for women. So she's been doing this for quite a while and been very successful. So she's got some very interesting techniques. So with that, Wendy, welcome to the Candlestick Forum. We're anxious to see your information tonight.
Thank you, and I'm very happy to be here. Before we get started, Steve, I wonder if I can ask, can I get you to kind of field the questions at the end of the program, and so that I'm not having to look through the chat as I'm going through my charts?
Certainly. So everybody, if you will hold off on your questions to the end, that'll make things move a little bit smoother. All right, we'll do that.
That would be great. That's awesome. I appreciate it so much. My goal and hope tonight is to be able to share with you some patterns that you'll be able to implement and apply to your charts right away. And with that, we'll just get started. For those of you who don't know me, I have been trading for about 10 years. I administer 4 advisories, and I've written a number of books. And several of these books deal with the pattern that we'll be discussing tonight, and that you'll be able to implement. The P3 system here is a long strategy that uses daily charts, applying the squeeze pattern. And then the price surge system is more of a swing trade, shorter term, and it trades both long and short using 60 and 30-minute trades. And then the latest one is the Qs, and that uses the pattern in a number of time frames, so it can actually go from quick day trades all the way down to or up to daily or weekly charts, if that's the time frame that's comfortable and works well for you. I'd like to start with the Qs, and because that's the latest book and something I'm very excited about. But if we only talked about the Qs, that would be rather boring. So I will start there. We'll run through some information, and then I'll cover some other stocks so that you can see that it works on any equity, and then I'll cycle back around to the Qs if that sounds logical. We all come to the stock market by various means. That sometimes we have someone in the family that's involved, other times that it's our education or professional, that we're at a bank or a stock exchange. And many of us come to it for financial needs. And that's where I fall into this trading atmosphere, is the fact that my husband and I owned a gift shop for 25 years, and that was our livelihood, our investments. It just was our whole life. And back in 2004, we experienced a flood that just wiped everything out. All the merchandise, all our books, all our equipment. And we found that we were really in a bind because we'd put everything into that, the business, and didn't have any extra really. And so I took just a few $100s and took a couple classes on options and found that it was a good fit for me. And I think what I bring that's different is the fact that I don't really have a financial background. I don't have any preconceived ideas about charts and indicators and so on. I'm an artist, and so I bring this to the market. And so things popped out to me that weren't seen by other people. And that is what I have really developed through the years. I think of myself as being like the average person, the average trader, and that's the way that I approach my writing. I write like you and I are sitting across the kitchen tables talking, and I'm saying, do you see this? Do you see that? And it's the same with the amount of money that I invest with and the size of my working account, if I'm not investing thousands and thousands into each trade, my average is about between 600 and 1,000. And so, like I said, speaking from that kind of parameter that I am just your everyday kind of trader, hopefully you will identify with some of this. Get rid of that. My personal goal is, and was at that time, financial independence, and that desire grew to sharing and helping others to achieve the wealth-building objectives of financial freedom. I started with women and found that more than half of the people that bought this book with the bright pink cover were men, and it just went on from there to writing strategy books on long and short trades, doing newsletters, coaching, and the advisory services. So the elements that I'm going to cover tonight and that I want to go over with you that have led to this trading success is, one, the leverage of options themselves, and then buying weekly option expirations, and then trading these special patterns that point out explosive moves. And what I'd like to do is to take this step by step and cover each of those aspects. And there's a couple of them that there'll be more information than others, but I think it's important that we go over it quickly. So for those of us that are not familiar with option trading, there's two types of options. One is a call option, and this gives the buyer the right to require the grantor to sell the equity to them at agreed upon price at exercise at an agreed upon time. Then there's put options, and this is what you would buy when you think the market is going to go down. And this gives the buyer the right to require the grantor to purchase the equity from them at an agreed upon price on exercise at an agreed upon time. So here we're going to start with the Qs, and this is an example of the leverage of trading options, and we'll just go over this very quickly. The Qs is an ETF covering stocks that are traded on the NASDAQ. So on May 16th, the equity price is $86.50, and on May 30th, that's 11 trading days later, it rises to $91. So that's a gain of $4.50, or 5.2% gain. That's pretty nice over 11 days. On May 16th, the June 2nd week expiration, so week 2 there means it expires the second Friday in June, the $88.50 strike call option premium is 78 cents per share, so a contract is $78. On May 30th, the bid premium when you want to sell is $2.85 per share, or $285. This then is a gain of 265% over those same 11 trading days. So with the leverage of options, we're looking at a 5.2% gain in the stock profit area versus 265% gain for option. If we take this comparison a little farther, the total investment for 100 shares of the stock would have been $8,650, and it earned a total profit of $450. So if you took that same total investment of $8,600, and then each contract was $78 for 100 shares of the stock, for the same investment, you could have bought 111 option contracts and earned $22,977 during those same 11 trading days. So this is an awesome comparison to be able to really realize the leverage that comes from a smaller investment trading options. Now, it's unlikely that you would have really invested $8,600, but you can really see the benefit that comes from being able to have that extra leverage. So here's a Q chart that shows the trade we were just looking at. And here you have a flat area, and then it dropped. And then here you had a flat area, and it rose. So what is going to tell you that this is the time to enter, and what is the difference between this flat area where it consolidated and this flat area where it consolidated? And that is the pattern and what I am going to show you that is going to lay out this explosive move. All right. The second aspect of the success of this strategy is weekly options. So we've covered options themselves. Now we're going to discuss weekly options. And there's a lot of people that just really don't understand weekly expirations. They're scary because they expire in a week or in 2 weeks. And so I'd like to cover the benefits here and take several slides to go over it, and I'll do it real quick, and then we'll get going again on the pattern. Weeklies are celebrating their 4th birthday, but they're still really new enough that many traders just don't get the advantages. As traders, we've been taught not only the value of time, but also to make sure we purchase extra time so our trades have plenty of time to unfold and play out. This isn't the thinking behind trading weeklies. With weeklies, the aspect of time works in reverse. We're not looking for extra time to allow our trade to play out, but providing we have the trade direction right, we're seeking to protect against the market's fickle change in direction. We're using the short time expiration to our advantage. And so, real quick, we're going to cover a few more. Weeklies are cost-effective, a fraction of the cost of monthly options. They're flexible. They're a useful trade vehicle for numerous strategies, calls and puts and spread and covered trades. Long-term trades are subject to the market changes. And with short-term trades, you can trade what the market hands out. Since weeklies are new every week, a trader can pick and choose to enter at the moment that the action is happening. There's no need to tie up capital waiting for an equity to go through a pullback or a consolidation period. Just like the chart that we looked at earlier, you would not have invested during those flat periods where it consolidated. You would have been watching and ready to get in when that explosive move was going to start. You enjoy 52 expiration periods during the year. Weeklies are available on indexes, stocks, and ETFs. The exchanges offer new weeklies on companies that will attract attention each week, and so there's more and more weekly equities or equities offering weeklies every single week. And 1 week out of the month, all optionable equities are weeklies. They become weeklies because that's the expiration period. Weeklies are a short-term chartist dream because what you ask is, where will this equity be in a week or less? You're not looking months out or year out, that you're just looking at the short time frame. This shorter time frame then allows for more accuracy. Weeklies can be used in conjunction with news announcements and earning reports and government minutes and so on. Weeklies remain more reasonably priced even during periods of higher volatility. And once the news is released, weeklies suffer less of a volatility crush than monthly options do. The Greeks on weeklies inherently offer a greater delta. Weeklies don't suffer from high theta. Time value is less of an issue. Cheaper prices means you can purchase more contracts for the same total investment. We looked at that in our earlier example. Additional Greek benefit is the gamma is explosive with so little time value. Quick price moves before the market can change direction compounds the benefits and leverage of option trading. And just recently, within the last year or so, exchanges have received permission to offer weeklies 5 consecutive weeks in advance out in time. But an aspect you have to remember is you don't want to buy too many weeks out, because then all of a sudden it's like you're buying monthlies and some of the benefits of weekly options then disappear. So initially my goal was to help people to achieve financial independence through option trading. Now I have incorporated utilizing weekly options and the squeeze pattern, and then various specific strategies to achieve that goal. That once in a while there are some losers, that the point is to close those out quickly, and chances are when a stock does go into a losing phase, it's the fact that it's going to re-squeeze, and we're going to cover this as we look through the charts. But I hear from traders every day who are experiencing great success using this wealth building pattern, and this success for them has been life-changing. As I mentioned earlier, as we're going through this, it will be using approximately $500 to $600 per trade, which to me is a reasonable amount that the average trader would be able to invest per trade. If you have a smaller account than that, there isn't any reason you couldn't do it with $300 a trade. But we're going to use this as an average as we proceed. Excuse me. So here we've covered 2 of the aspects now. So we're not just talking about option leverage, but we're talking about weekly option leverage. And I have discovered through my years of trading that a 2.5% to 4% equity move often will double a weekly options premium. And so that kind of is a goal that I try to work with and have set forth, that I look at equities, the Qs included, and look at what their average true range is. I want stocks that move, and then that are going to move this 2.5% to 4% within just a few day period that fits into this weekly option expiration. So here's an example of the Qs that, and we're going to look at a chart here in a second. Had you purchased calls mid-trading day on August 8th for $1.30 per share, and that should be $130 per contract, for the September week 1 95 strike call. Again, this expires the first week in September on Friday. And let's say we bought 5 contracts for a total investment of $650. We sell at the end of the day on September 25th. The calls were at that point worth $4.21, or $2,105 total, or a gain of $1,455. That is 224% gain over from the 8th of August to September 25th. So that's a little bit longer period of time. Now the Q's price when we entered was approximately $94.50, and when we sold it was $99.50. So that's a $5 change. That's a hefty 5% increase over that time period. So it went over even the 4%, as we can see that it It more than doubled over those 12 trading days. Is that 12 trading days? That's more than 12. Maybe I have one of the months wrong here. We'll look at the chart and see what it is. All right, so we are looking at the chart for August 8th. And so we're looking at this and we're wondering, okay, what's telling us that this is ready to explode upward? We had a period here where it kind of consolidated, went up and down a little bit. Here we've had another period of time where it tried to get started, it dropped, went up here, went down again, up. Looks like maybe it's going to be almost a inverted head and shoulders. But anyway, there was this, it traded in a range for the period from the beginning of the month to the 8th. And so we're wondering and hoping to find a way that's going to tell us this is getting ready to explode upward. So let's start adding some indicators. And this is starting to form the pattern that I'm going to show you tonight. This is the PPO, and that stands for Price Percentage Oscillator. I had to think for a second. It is quite like the MACD. So if you can read the MACD, you can read the PPO. And with the PPO, we have the PPO line, which is the black line, and we have the red line, which is a signal line. And when the indicator line crosses the red line, it indicates the direction of price. So here we have an upward move where the signal line crossed over the red line, and as you can see what happened, price moved up. Here it crossed down, and so we have a period where it went down. And then we had a flat period, and you can see that's what we have here, a downward move. And then now we have this cross up, and yet it really hasn't broken out and headed up in a strong way like it did during this period. So we're going to add more to this, and I'm adding the average directional index. And this line you can think of as an energy line. It's momentum, it's strength. And when it goes up, strength is building and strong. When it goes down, strength is weakening. And this doesn't necessarily tell you the direction. It tells you the strength of the move. So here we have this cross of the PPO, and we have the ADX heading up. It's showing that there is a strong momentum, a strong energy behind this upward move. Here the price is going down, and the momentum actually has gone down. So this was not like a huge drop here because it leveled out. And this is telling us that momentum is coming out of the direction, and the direction at the moment was down, and it just didn't go anywhere. Where here you have the PPO cross down, and you also have the energy going up. The strength behind this trend is up. So what you end up seeing or having here is a strong down move, and that's exactly what this told us, was the fact that the PPO crossed down and is heading in a downtrend, and there's a great deal of strength around it with this rising momentum line. So now I've scribbled all over my chart, and let me see if I can figure out a way here to fix it off. Let's see if this gets rid of it. Well, it didn't totally. And what I've done is I've obliterated what I wanted to show you. All right, here. This is my artist pattern. This is what the whole thing that we're getting to. I noticed that here the PPO has nothing to do with the ADX. They are totally separate indicators. They just don't have anything to do with each other. There's no connection. But I discovered when you get this pattern that is right here. This is what I call a squeeze. When you get this pattern with the two lines, the two black lines, coming in close together, they're squeezing in together, that this is setting up and becoming primed for this explosive move. You just don't want the lines to come together. What you want is for the lines then to start spreading apart. And there are some other confirming indicators that are placed in the chart, but this is the main thing. So let me run through some others so that you can see what I'm talking about here. All right. Here is the Q move. This is the same chart that we were looking at. And so we have this pattern. So the lines are spreading apart, and yet the PPO has come down and it's tested the signal line, it tested the signal line, and it's only here that it's starting to spread apart. Again, it tested the signal line, and then it started going up with its momentum. And so we are seeing this move. Anytime you see this type pattern, it may, as the lines are spreading apart, it's going to go into this explosive move upward. Or let's say that this area here, the PPO had crossed down, it would have created another squeeze pattern. This would have come down close to the ADX line, and then we would have started looking for the same spreading apart again. So let's flip to the next slide. This is the same chart, and so now we're looking at the full trade that we were talking about. And remember in the detail that said September 25th, it was August 25th. So we're looking at 11 trading days. Makes more sense. So you have the squeeze here that we've been looking at, and then you had this area where it spread apart and it shot up. And we're going to look at this at a number of different charts so that you'll be able to see that this trading pattern holds true. If I was to stop right now, I have no doubt that you all are clever enough that you'll be able to recognize this pattern. So here we're going to look at a few other equities so that you can see that I'm not just favoring the Qs at this point, but that it holds true for other equities. So we have Amgen, and we have the squeeze. There it is. Again, the PPO has nothing to do with the ADX. This is just purely synchronicity or something. That, but the lines are spreading apart, and up it goes. Here's Newmont Mining, and you'll begin to see that the squeezes as they form can take different shapes a little bit, and it doesn't have a whole lot to do with how close the lines are. Is going to be a greater move that as we look at these examples, we're going to see some that have much wider spreads but still work out to be beautiful trades. So again, here you have the squeeze form and the lines spreading apart, and up it goes. There's a couple others. And this was the point I made earlier, that it doesn't necessarily matter how wide or how tight the squeeze is. It really matters about the confirmation signals. And it is just all too much to cover just tonight, and that's the information that's included in the books to help keep you out of entering too early or before the trade is really ready to form. That if you look closely, this started to spread just the tiniest little bit here, and you did have a pop, and then the lines came in a little bit closer. Again, here it tested the signal line, and a little tiny bit of strength right here is in the ADX. And we had this little move, but it still was not, or had not gained the strength and the momentum for the big upward explosive move. And it ended up fizzling out and forming this re-squeeze, as I call them. There's stages that every single squeeze goes through. As a matter of fact, there's 7 stages, and so some of the stages prove to serve a purpose as far as trading. But there's the entry stage, there's the stop when you get stopped out, there's times when it is wobbling, I call it. It hasn't got its legs yet. There's a time where you can relax while you're trading and knowing that it's going to go up. And then there's your exit. And so the stages of this pattern really take you fully through a trade and what you need to be able to trade successfully. Here's another example. This is for solar. You have the squeeze, you have the lines spreading apart, and you have this nice move upward. I don't look like an artist, do I? All right, here's Celgene. Again, I have no doubt now that you'll be able to pick this out and see it on all your charts. The lines spread apart, and up it goes. Johnson & Johnson. Here's another one. They spread apart, and a nice price move. Now, all of these that I have shown you are an explosive move upward. As I mentioned in the Price Surge System book and the Q Merit Paycheck, it covers not just the long trade, but there is also a short trade squeeze pattern that is just as easy to recognize. All right. This is a squeeze that took several days to form, and finally right here the line started moving apart and we had this move upward. So let's look at I'll flip back so we can look at it just for a second before we look at the details. So this is the move that we're going to discuss as far as results. That we had a drop down that formed the squeeze, and it went through a day or two of bottoming here, and then it got ready for this recovery move back up again. So if you remember, we're looking for stocks that have a nice price move so that it equates to a double in our weekly option premium. That had we purchased calls midday on June 24th for 75 cents or $75 per contract for the July 75 strike call. Now this is monthly expiration because we were buying within the monthly time period. And let's say we bought 8 contracts for a total investment of $600. We sell at the end of the day of June 28th, 4 days later, and the call contracts were worth $3.50 or $2,800 total for a gain of $2,200 or 367%. Now that's awesome. I mean, that is just an awesome trade, to be in a trade for 4 days and to make 367%. Now, when we entered the trade, the price was about $73, and when we sold it was $77.50, so that's a $4.50 change in price. That's a 6% increase above the 4%, and yet we ended up with a 367% gain over that short period of time. So this is what it's all about. It's about using options. It's about using weekly options. It's about finding that pattern that's going to really show that the equity is ready to explode upward. All right. The pattern that I'm showing you and that we're discussing tonight, which I say is just the long pattern, not the short pattern, but it works on any type of equity. So what we have here is the Dow index. And so here we have a squeeze. And it shows that the index is going to go up. So you can use this with the indices. You can use it for indexes. You can use it for ETFs. You can use it for the sector ETFs, which then if you see a sector ETF, say in technology, have a squeeze, that helps to support the idea that if you found an equity stock that also had a squeeze going on it, that it supports it, that you can use this pattern as backup information to support the direction of and your thinking in purchasing an equity in whatever sector. So when you see a chart like this, it's time to trade the plan. You maybe have a trading plan in place, and so once you then have the confirmation signals, you're apt to have a huge winner. So here we have a squeeze here, the lines spread apart, and price went up. Then we have a downward moving right here. This is what you would be seeing at the point that you would, your radar, your antenna would go off and say this stock is getting ready. Now you have to wait for the confirmation signals before you enter, because this can get a bit tighter or it can elongate a little bit, look like a bottlenose dolphin or whatever. This might drop just a little bit closer to form a double bottom here. But eventually you will get the confirmation signals and you will be able to take part and benefit from that explosive move. I covered this information actually before, but all squeezes are not the same. That here you have a squeeze formed, the line started spreading apart, but the ADX line never got the momentum behind the move to actually send this up. Here it re-squeezed a little bit and it re-squeezed another time. So during this whole period, you really have not had the ADX get involved and to support the upward move or to support the spreading part of the line. So you want to be looking for that, and again the confirmation signals that says this is ready to go. Here's another pattern, and the point of this is the fact that I actually wanted to be able to show you that you need those confirmation signals, that all squeezes aren't the same. You can't just think, well, this is real tight and here it's spread apart, that it's ready to take off, because that's not the case. You want those confirmations. This flattened out even though this was spreading here. You didn't end up with this ADX line getting behind the movement. It finally kind of fizzled out and said, I need to gather more strength before I can head up. Here you have a little bit wider squeeze and the line started to spread. But again, it didn't have the momentum and it just flattened out. And these are all the details and the stages that the books cover. This is one more example that you had a really nice tight squeeze here. The line started to spread, and yet it just never really got going. The ADX line rose a little bit right here, and you see that it started, but it just couldn't maintain that and dropped right back down again to trade within this long trading range that lasted at least a half a month. And the point is, you don't want to have your money involved during a long period of time like that when you're trading weeklies, because one, you're going to run into a loss of time and expiration and accelerated time decay. So you want to have all of the details and the confirmations working to help you benefit. Here is actually two squeezes, and what I'm going to be showing you here is the fact that we discussed earlier about having a 2.5 to a 4% move would almost or quite often double your option premium. Here is a squeeze that moved and went up, and you have the ADX support it. And so this move right here is approximately a 4% move. It was a $2 move, so approximately 4%. So this move here would have more than doubled the option premium. Here you have a squeeze, and it played out again, and you have almost a 9% move in price. So this is a move that would have really, really done well as far as the option premium. Let's see here. So we started with the Qs, and what I'd like to do is kind of wrap up with the Qs. And I've circled a number of squeezes here. This one had a nice run up. Then we had a drop. We had another run up. And then we've had another squeeze that has started. So this is trading the 60-minute views. The book focuses on 8 trading patterns. One is this P3 squeeze, and there is the short squeeze pattern, and several others, so that no matter what time frame you are deciding to trade, you can find a 60-minute chart, a 30-minute chart, a 15-minute chart, one of the patterns, and have trades just on this one equity. Now, of all of the questions that I hear most often from traders is the fact that they could run through a long list of charts and they will find a dozen or a half dozen equities that are forming a squeeze. And so they're saying to themselves, well, how do I know which one? How do I pick from the dozen which is going to be the best one? Of course, you have considerations like which one fits into your trading budget, is the spread adequate or too big, and so on. But still, how easy would it be to only trade one equity? And that's the Qs, to be able to flow and go from a long trade to a short trade to a long trade. And you can see that on this chart, that you could have easily gotten in here and wrote it up and then wrote it down. And it's like waves in a sense, that you can just flow in and out and just trade the one equity. And the Qs is the most liquid, highly traded equity in the NASDAQ, or that incorporates the stocks from the NASDAQ on the volume is just in the millions. You just don't have to worry about your trades ever being filled. So on the move that we just looked at, had you entered on April 20th, purchasing the May 2nd week expiration, or the 107 strike calls with 18 days until expiration for an ask premium of $1.40 or $1.40 per contract, and you purchased 4 contracts for a total of $560. Again, we're staying in that normal trading range for the average trader. And you sell the trade on April 27th for a bid premium of $3.65 or $365 per contract. That's $1,460 total for the 4 contracts. That's a profit of $2.25 per share, or $900 for the 4 contracts. That's 160% in those 7 days. Again, the leverage that you realize in trading options and weekly options compared to that of stocks is so great that all you have to do is really have the direction of the trade right. And that is what allows you to grow your portfolio, to be able to set money aside for retirement, to recoup from other losses. It really is the elements for trading success. So these are the key elements that we've covered tonight, and that the books cover. And I would like to say that the books are easy to read. There's dozens and dozens of examples in each of the books, but I don't hold anything back. I'm just out there and just say it and give it like it is. And I'm hoping truly to be able to help other traders reach the same level of success. So here we had weekly options, or the front month where it is very close to expiration, and that's the leverage. You want to follow the strategy guidelines as to open interest and volume and the spread between the bid and the ask. And these are all important so that you select the option with the greatest chance of producing the leveraged results. And again, these are all details that are laid out in the book. You only want to trade stocks and equities that have large percentage moves, because you want, like we've discussed a couple times through here, you want to be able to see that 2.5% to 4% move within your expiration time period. And still, with that said, here we've been looking at 100% moves. If you only have 50% move in 4 days, I mean, there's nothing wrong with that. That's great. And so we have the squeeze pattern chart set up with the confirming indicators, and they go through the stages, and all of that's laid out in the books and DVDs. But this gives you a very confirmed, safe entry signal that will result in a profitable stage. I covered this before about the stages that every squeeze goes through, and it can relay a great deal of information regarding the initial entry, perhaps the second entry, when to hold, the stop loss, and then when to exit. So the books that I mentioned at the very beginning was Price Surge System, which trades the 30 and 60 minute, and it covers both calls and puts, long and short trades, and using the squeeze pattern and the short pattern, the P3.5. It is a book. It's a newsletter. I send out a weekly newsletter that gives you a list of equities that are forming the pattern, both long and short, and then there's an advisory. The P3 system is a longer strategy that is just long and covers daily charts, because these upward moves last for a longer period of time. Again, it's a book, a newsletter, and an advisory. And then we have the Merit Paycheck. And this is the one I'm so excited about, because it eliminates one more level of confusion for most traders, and that is which stock to pick. You could primarily trade the Qs and throw in a extra one here or there, but it is a way to really be able to focus and become an expert on one equity and really be able to ride the waves up and down. It's an advisory which includes a book that covers the 8 patterns, which included the one we discussed tonight, as well as the short P and 3.5 trade squeeze pattern. So when you couple these patterns with the leverage of weekly options, it makes it affordable and profitable for the everyday trader. That you can find out more about the books and newsletter by contacting the toll-free number, 888-233-1431. You can get information on the advisory by calling 877-404-7177. You can email support@iss-trading.com. And I have a general website, which is wendykirkland.net. And if you'll click on, there's a little read more. It will lay out some of the books and more information on them. That Steve has allowed me to put in a special link here for a special offer for those that attended tonight. And I think that this link is going to be dropped into the chat box. I don't think you can actually click on it here, and I'm not sure if you can cut and paste. But I believe the link can be seen in the chat box. I'll scroll down here and see if I can see it. There it is. Yes, thank you, Becky. All right, well, I'm going to maybe try and scroll back up and see if I can field some of the questions that you may have had. How far back to go?
Wendy, Jim just did a double line. Everybody that has questions can start putting their questions below the double line. So scroll down to the very bottom.
I see it.
And it should, okay, you should start from there. There's.
All right, I do see it. Let's see. Do I offer refunds if your service is not suitable after a short period of time? There is a guarantee, and I'm not sure for the Qs, but for the price surge system and P3, it comes with the book and a 90-day free newsletter, and you can just cancel any time along the line, and you're not obligated is the word I'm looking for to go beyond that. And I believe you can return the book and get a full refund. Please explain why the settings for PPO are consistent for all charts while at least 8 different ADX indicator settings. Okay, this is part of what I was trying to explain, that the PPO and the ADX have really nothing to do with each other. That I can't remember now right offhand, and I'd have to click back to see, and you'll be able to check this tomorrow because you're going to get a recording of this. But there is an ADX indicator, and I can't remember if it's 14 or 21 what it's set at, but it varies for every single equity, and so there's no real correlation between the two indicators, and it's just this anomaly as far as the pattern that sets up. but the books go through every single detail of setting up the chart, not just for the PPO and the ADX, but the couple other indicators that give you those confirmation signals that I've mentioned. I'm going to flip back here for a second. See if I can. It looks like I can't do it. Okay. Again, the book covers the details. The parameters are set for the time period that is on the chart and is individual to each stock. The weeklies do not suffer from high theta. It's part of the equation of what's used as far as the pricing of weekly options, and it just is not an aspect that takes effect. Do I have auto trading? Yes, I do. There's a couple brokers that handle my services. Let's see. We most often use at the money or out of the money options. And for at the money and out of the money options, usually the delta is right in the 50% area. Sometimes this is 45, but if you're going out of the options, but most are in the 50% area. And you can trade daily charts. Many traders will go for the price surge system book so that they're learning both the long and the short trades patterns, but then apply it to the daily charts or even weekly charts. And it's the same if you want to, say during this most recent trading period where we've been consolidating for weeks and weeks at a time, trading in a very narrow range, the narrowest range in history, they say, you can step down and apply this to 30-minute or 15-minute charts. I wish I could explain more of the confirmation signals, but within the time period here, I've been going for an hour, and this would end up being a 2 or 3 hour session if I was to cover all of the details. But they are explained in the book and explained and covered very thoroughly. Normally, in trading, either the PSS or price surge system or the merit paycheck, you're buying a week to maybe 2 weeks out, so that you have time to capture the upward move or the downward move, but you're not buying a great deal of time where then time works against you. The book covers the settings for the chart. It goes into great detail as far as all of the indicators and what parameters and so forth that you would be using. The PPO is not available on every single trading platform. That I use stock charts quite often. Thinkorswim, there's been so many traders that have asked about the PPO that they have, I don't know, set up. If you search, you'll find some people that have come up with the program to be able to do the PPO. But if you don't want to use the PPO, you can use the MACD. They're very, very close. The pink book is on Amazon, the Trading in Your Spare Time. The other books are available through TradeWinds. and my website, wendykirkland.net, will bring you back to the TradeWinds pages that will give you all of those details. And I believe that as you receive your recording tomorrow, there will be additional information on there as to how to access them. Do I ever buy the Qs at the money or in the money? Occasion, and that really depends on the time that I think the pattern is going to unfold. And so there can be occasions when I want a higher delta, and so I will buy just a little bit in the money or at the money. Quite often, because of the quick move that we want and the explosive leverage, I will buy the one that is just out of the money. Would double or triple leverage ETFs be good candidates? They would be fine candidates, and I often will trade FAS or FAZ, and there's a lot of them out there, and they do well. They move fast, and you have to be quick. But if you understand and know the patterns and the stages of the patterns, it moves fast, and you just have to move right along with it. Do I have a scanner to locate my squeezes? I do not. And if you want to say the problem with that is exactly what creates the uniqueness of the pattern, and that's the fact that the ADX and the PPO don't have anything to do with each other. And the guidelines that you would set, as some people have mentioned here, is not standard for every single equity, that it's different. So you can set up a scan for crosses down, say, or crosses up of the PPO, but that isn't necessarily going to give you the momentum strength from the ADX. And so there just really isn't a great scan for it. The way that I am able to do the newsletters every week and to come up with a long list or a list of 12 or 15 in each newsletter that says this stock is setting up the squeeze pattern and it's one to go on your watch list, is my son Patrick works with me, and over the years I have set up numerous lists of charts, and as I see a stock dropping, it goes on this dropping list, and then as it drops more and the squeeze starts, it gets moved to another list. And so we are forever shuffling stocks from one list to another, and eventually if a newsletter comes out on Wednesday, I'm going through this kind of finalized list of equities that are beginning to form a squeeze pattern, whether it's a long squeeze or a short squeeze. And then after it starts playing out, it gets removed from that list and gets shuffled back over to another list that would be starting to form the P3.5 pattern. And it's this constant process of us sorting through the list to finally come up with the information for the newsletters. So the newsletters, they're free with the book. A 3-month subscription and so on. But it saves you so much time because you're not having to do all this juggling that we do. Same kind of question about the TQs and the triple leverage, and yes, you can trade them. The pattern's going to work on any type of equity. I have traders that trade Forex and use it. That it really applies to any type of chartable equity in any time frame. Does the permanent paycheck system include? No, they're each individual books. I'm assuming this is the merit paycheck system, include the price surge and the P3. Each one is a separate product, and each one covers its own unique information. So here we have the P3 system, which trades dailies, and that's what it focuses on, and trades just the the long squeeze pattern. The price surge system is a shorter term time frame. And when I wrote the P3, I didn't know about the P3.5 pattern. And so that's the reason. The P3 was one of my first strategy books, and it covered this long trade based on this pattern I discovered. Finally, years after, I had traders that said, please, don't you have a short pattern so that we don't have to stand aside when the market's dropping that's as easy to recognize and trade as the P3. And so eventually, it took a long time, I came up with the pattern for the short trade. And that is what's covered in the price surge system book. That is the P3 and the P3.5, long and short, on the 30 and 60 minute. Now, Merit Paycheck is just geared toward the Qs. It includes the P3, P3.5, and 6 other tradable, recognizable patterns so that you can always be in a trade on the Qs in various time frames. And thank you, Chris, for clarifying that the ADX was 14. That's what I remembered, but I wasn't sure. So thank you very much for that. Let's see. Well, ETT, it says you wouldn't provide me with a refund when I requested it. I always talked about a guarantee, but absolutely no refund after. I'm kind of removed from that end of things because I do the trading, but if you contact me through the wendykirkland.net site, I will see what I can do to help out. I can't even copy and paste the link. Let's see. I would think that you'd be able to click on the link in that Becky has posted there. If not, the information again will be in the recording that you get tomorrow. I think I already answered that one. I don't think that you can buy just the CDs. There is one CD that is a standalone product called The Life Cycle of a Squeeze, and that DVD covers the stages of the squeeze pattern. Each book usually comes with 1 or 2 CDs that gives many more illustrations beyond what's in the book, and that way I'm able to kind of narrate through it. I realize by putting different replacements you can get squeezes in different places. Not sure exactly what that means. The squeeze is different than Bollinger Bands. Those are based on different parameters, and it really is not quite the same, and would often come up with different candidates. The squeezes that are creating my squeeze between the PPO and the ADX would not necessarily look like a squeeze with the bands. Do you look at weekly ATR? If I was looking at a weekly chart and thinking about trading a weekly based on weekly moves, I would look at a weekly ATR. I usually look at a daily ATR, and I want to make sure that the daily moves are adequate to happen within the time frame that I'm looking for the pattern to unfold. And so I look at daily moves. How do we get the book for the Qs? By following the link that is being posted, and or going to wendykirkland.net and reading through some of the information. But you'll get this again in your recording tomorrow. Is there any difference between using a weekly that expires in 1 to 2 weeks versus a monthly that expires? With the monthly being that close, it would be about the same. Now, The monthly is usually not available on the third expiration. I didn't say that right. There is not a weekly available on the third week, the third Friday of the month, because that is the week that the monthly becomes available. But if you're going to buy 2 weeks out, you can buy either the second week or you could buy the monthly, which is the third week. The stop losses go according to the patterns, and they tell you when it's time to exit if the trade is failing. And beyond that, I have found that stop losses is kind of a personal thing as far as your loss tolerance. And so if a person says, 20% or 25%, that's the line in the sand for me, then that's what you set. Chances are the pattern for one of the squeezes, long or short, would get you out of the trade before you hit that percentage. But again, you set what you're comfortable with. And if you can see that the pattern is weakening, that could just be a sign to get out, or you actually go by the stage in the pattern that says it's time to get out, that this is going to re-squeeze. Does your system work with spreads? Yes, it does. The idea is the fact that these patterns are going to give you the direction of the move, and that's the information you want to know for whatever you're trading, whether it's calls or puts or spreads, covered calls. It works with all different strategies. You covered the squeeze with calls. How can you trade puts with this technique? There's a separate pattern. It's the P3.5 pattern that's covered in the PSS book or the Merit Paycheck. How many option trades an average per month do we get? In the newsletters that come, it usually covers, there's probably 15 or so that are listed for long and 15 for short, and you enter as many of those that give the confirmation signals as you are able to purchase or afford. You may be in 2 or 3 trades, need to close 1 or 2, then you enter a couple more as they develop and give confirmation signals. So it's a rolling in and out, that all equities don't unfold and play out at exactly the same time. So it's whatever you can manage time-wise, whatever you can monitor, and whatever your bank account, your trading account says that you can afford. Yes, it does work on commodity futures. Anything that is chartable. I don't have the total return on the trades, but it was thousands. The winners to losers, much more of the patterns play out, and they all play out eventually, that there may be a re-squeeze and you exit if you have that cross down of the PPO line, and then the squeeze will form again, and then you play out, and that's the one. But the confirmation signals keep you out a lot of those false moves. Yes, the puts are from the P3.5 system. Merit Paycheck book. There is a 150-page book maybe that comes with it. It's sizable. It covers all of the details in a very concise form, but covering from the chart setup to the different patterns, how to interpret them, how to apply them to the different time frames, how to pick just the right options, what weekly option to select, what you're looking for as far as spreads and the details that are going to help you have to have a winning trade and so on. Is there a maximum number of contracts that one can trade based on percentage of volume or open interest? Well, I give you the parameters as far as what you should be looking for in open interest and volume and so on, but with the Qs, that isn't an issue. There's thousands and thousands of shares traded every day. As far as other equities, like those that you might trade with the price surge system, I give you those guidelines of what you're going to look for as far as volume and open interest and spreads and delta and so on. And again, once you find a trade that meets those parameters, then as far as the number of contracts is really based on what you want to and use as a total investment per trade. Now, in the books, mostly I recommend like $600. And so if the premium is $1, that will give you 6 contracts. And so you set what you think is your max investment. And then I suggest that you stick with that. If you think that you can manage 1,200 instead of 600, and that's going to be your total investment level, then stick with that and trade that for a period of time until there's a good reason to decide to trade more or less. I think folks sometimes run into trouble when they will buy 2 contracts of this for $120, and then they go and they do an investment of $500, and then they do one of $1,000, and then they're back down to $500. To me, that you're not trading a trading plan with that you want to set something up that you're comfortable with and work with it until there's a good reason not to be working with it. What is the title of the book? Well, it depends which one. There's Price Surge System. There's the P3 system. And then there's the Merit Paycheck. Do you run a scan? Well, I pretty much answered that saying there isn't a good scanner. I haven't found one. Lou has the PPO and TOS. Good. Maybe Lou can help you as far as what the PPO setup. It really depends on your charting platform. It may be offered. If it isn't, as I mentioned, you can use the MACD. The Merit Paycheck really is an advisory for the Qs, for the Merit Paycheck. There is a separate advisory for Price Surge System and a separate advisory for P3 system. And again, tomorrow when you get your recording, there will be links that you can click on or information that will help connect you to the right phone numbers or the right special offers that are being made available to you. Why the Qs and not the S&P or the Russell? You can trade the squeeze on any of those, on the SPY, on the DIA, on the IWM. It works on all of them. I just really like the movement of the Qs because it's based on the NASDAQ. And as most of you know, that a strong uptrending market, if you have the NASDAQ is leading, that speaks well for the strength of the uptrend. And it's the same when the market turns and it's the technology stocks that are dropping. You want to have that momentum on your side. And so I just like the Qs. That is my favorite. I've been trading them for years, and and that's one of the main reasons, is the fact that it's a leader. The squeeze will work on any time frame chart. Is your profit target always the 2.5 to 4% on the underlying? Well, I kind of look at that as being a guide. If I were to be trading, say, a 15-minute chart, those patterns are not going to have as deep a move as a 60-minute. They're going to go through a pullback that'll take me out of the trade or whatever. So in that case, maybe I'm only going to go for a 1.5 to a 3% move, and I'm only going to make 50%. During this period of consolidation where the market has been going up one day and down the next and so on, we've been in and out of trades rather quickly. And so here, maybe you are making 50% in a day or two rather than 2.5 to 4% in 4, 5, 6, 7 days. You adjust, and this is part of what makes this whole pattern so flexible, is the fact that you can use it in different time frames. But you can be trading a 60-minute chart and hope that a trade is going to play out over the course of 4 or 5 days, and maybe it begins to weaken, and you decide to take profit halfway through. There just is nothing wrong with taking a 25% or a 50% profit in just a day or two. And, there's just nothing wrong with green. Is the squeeze that we went over tonight is only used for calls. I did not cover any put examples because the chart setup is different, and we are probably running way over time here. I probably should wrap this up. I think the price, John, you're saying that the offer for the advisory for Merit Paycheck is $900 for 6 months and $1,900 for 8 months. This is exactly the same special price that was offered before. It isn't any different. Now, the books and newsletters, where you get the book and the 3 months of free newsletters, is considerably less than that, less than price than this, more in the $100 to $200 range, I think, because it's not an advisory. This is an advisory where I am, during the course of 6 months or 18 months, I'm giving you the trades on the Qs. And this is auto-tradable. So it just depends what you're interested in, what you want, how much help you want. The Merit Paycheck will give you the opportunity to be given the trades, and then as you're learning, you're seeing how it works and what patterns are being followed, and then you can branch off and go off on your own and say, I got this now. Let's see. What one book is best to start with if a person has a very small budget? I would say either the Price Surge System would be a great starting place, or if you can manage the Qs, that's also a good one. Okay. Some other emails will be sent giving some of the information on the Price Surge System and so on tomorrow with your recordings. And again, beyond that, you'll have the phone numbers and all that will be on one of the slides in your, as you go through the recording from tonight. I have not really traded binary options. I'm only vaguely familiar, but if you can chart binary options, then the system, the pattern will work.
Okay, everybody, I think we'll give Wendy a break.
Thank you. It's been fun, though.
And everybody, there's one very obvious element to Wendy's trading. It's very simple. It's not a complicated process. And the way she makes it simple is she's doing a lot of the legwork, or a lot of the research work for everybody, so they don't have to go out and figure out how to do the scans. She makes it available. So, Wendy, this is great stuff. Everybody, anytime you find a system that continues to put the probabilities in your favor, and that's the whole point of investing, is making sure your money is in the right trade at the right time. So, Wendy, thank you very much. This was very good information once again. Everybody, try the information. It's going to add to your trading strategies. So, with that, we'll say goodnight to everybody. Wendy, thank you. And we'll see everybody in the chat room.